Hey folks, Dan Frio here, the rate update. Today is March 17th. Happy St. Patrick's Day to you. I apologize. I had my first attempt at doing a live stream of Federal Chairman Powell speaking, and the audio was absolutely horrendous. But I want to start a discussion Tuesdays. I'm going to have Talk Table Tuesday, and I'm going to go live. My goal is to do that between noon and 1. I don't know how many people will be on there because of the time frame, but that's my goal right now. So I will promise you I'll get the live streaming down and the comments and all that other stuff. So that was my first attempt, so I apologize. So let's round this up to what's going on in the market and what Federal Chairman Powell said, and summarize that, and I'll let you know what's going on with rates. So don't go away. We'll be right back. Okay, so let's get to it. Basically, we had a huge reversal in the market, which was good news in the mortgage business and good news for stocks. Stocks took a big jump, and he eased the market, which was our thought and our hopes. The Dow is now up 191. That took a nice reversal. Look at the NASDAQ. We were in the red all day long. Now we're up 62. S&P 500 was in the red all day long, and it took a jump. And the headline news is stocks up after Fed boost economic outlook, but suggests near zero rates through 2023. Great news. He did exactly what everybody was hoping for in the markets, all the markets. What happened today? Well, let's look at the intraday market on where we are right now. Sorry guys, I'm trying to get my studio back in place because I had a meeting in here and then I did the live thing, so my apologies. Let's go through what we see today, and this is just a snapshot of the day in the last quarter, and we saw this happening. Here's where we are right now. So let's go to the intraday so I can show you guys what's happening throughout the day. Look at this move. This was red. It was just tons. Let me go the whole day. This was right when it started speaking. Look at the 2 o'clock, the ticker right down here at the bottom. It'll go to 2 o'clock. It was red. Everybody and their mother was selling, and so forth. And then we recovered. We're now red, but we had a run from 99.5 up to 100.1. It's a big move, a real big move. We were, if you see, this was more erratic than it looks right here because of this move right here. You take these out, and we had a nice recovery through the day. We were going back, teetering at basically zero. At one point in the day, we were down pretty big right in here, and then we just plummeted. And then the MBS prices went up, and we got into the green, which we haven't seen green in a while, but you can see how we're running real quick. Let's see what this chart does. You can see that as well. So that's where we are. 2 o'clock. There was kind of a bloodbath in the bond market or mortgage-backed securities market. So that's what's going on. So basically, just want to recap the news that he came out with. He said the Federal Reserve is going to continue pumping money into the system. They're buying $120 billion of bonds. $40 billion of that is this right here. So we're seeing, okay, a little bit of profit taking right here. So that's to be expected. Let's go to the full day so I can just watch that. Down 3. We were down this morning when I got here about 30. So I'm taking this as a plus because we're up plus something nice. And I'm hoping the day we ease the day, I'll be happy with a 0. So let's go through some of these trigger marks that we were hitting or we should be hitting. These lines right here that go across, straight across, those are called Fibonacci levels. These are resistance levels that are in place when you're trading, basically trading anything, stocks, cryptocurrencies, bonds, and whatever. These are levels put in place to be buffers. Okay, buffers on the high side and the low side. So just think of these as when you were a little kid, when you played bowling. Your parents took you bowling. They put up those bumpers. So when you bowled, it would hit here and hit here and hit here, and then it would go, down through here, and you'd get a strike. So that's what these lines represent. The other lines are moving averages. So if you blend out all these numbers, you would have a 200-day moving average, which is represented in blue. You'd have a 100-day moving average, which is represented in purple. You have a 50-day moving average, which is represented with the black line. And you have a 25-day moving average, which is representative of a brown line. So we got it right there. Look how sporadic these are. Usually they kind of coincide with each other a little bit when you have stability. When you have erratic patterns, you start getting this huge spread right here that we're seeing. So you can see that right back through here, we kept hitting or having resistance levels right in here. But then everything, the floor, dropped out, and we dropped all the way down to 99.5. That was the Fibonacci level here. But we blew through these basically with ease. And you can see every once in a while we teetered on, some areas where there was some resistance, whatever. But we blew through all these numbers. So now we got to start working our way back up. So the good thing is we hit a resistance here, and that stopped everything there. But the bad news is we're hitting a resistance here and we're stopping here. So my goal, or my hope, is we would get, let's look up through here, we're at 100, okay? So my goal is that we get past this red line right here so we can have upward momentum all the way up to 101, okay? That was, again, let me explain this chart. This number right here is what's happening to the price of the mortgage-backed security bond. As the price goes down, interest rates go up. As prices go up, interest rates come down. We want green in all of this, or we want a pattern to be similar to like we had for a while when we didn't have a lot of chaos in the markets. So look right through here. If we go back through August all the way through basically the end of the year, we were steady. There's really wasn't much movements, and where we played a key role for you guys is we would chart this, and there is movements in here, and we would chart this to pick the optimum time to lock in your rate. Well, when you have this going on, it's very hard on our end, so we monitor minute by minute, tick by tick, news clipping by news clipping to try to find a good entry point to lock you. Okay, so that's what our main focus is. But the tough thing is, in history or in economics, you usually follow, when we're following this stuff, these are predicated off of employment, inflation, GDP, PPI, CPI, freight indexes. We want to see how the economy's doing. Okay, as the economy is ramping up and we're seeing, gross domestic products and producer prices and everything on the rebound, then that's good, but it's bad for interest rates. But at least gives us kind of a crystal ball or stuff to study and predict where we're going to go. When things are predicated in today's world off of what the Federal Reserve is doing and or not doing, what the federal government is doing or not doing, as well as the pandemic, it's really, really, really hard to figure out what's going on because we don't know tomorrow's news, if there's going to be more viruses, less viruses. Is it working? What's the Fed going to do? Is the government going to stimulate or not stimulate? So there's a lot of uncertainties in the world right now. That's why I tried to post, here, let's go up here. Mortgage-backed securities earlier this morning were down 33. So now we're at 0. So we actually gained back that 33. That's a good move. So if you can see it up through here. Okay, so that's why we study this, and I want to give you guys a good idea on where rates are going. So there's a lot of things in the background that I try to study, and here's some charts that I'm going over today to look forward to the rest of the week. These are all charts that I study. Patterns, charts, economic data. But the tough thing is, right here, no matter what I come up with, if the Federal Reserve Chairman comes back and sneezes, it's a knee-jerk reaction through the whole economy, stocks, bonds, and everything, and this is the area where we focus. The 10-year Treasury is up 3. This is the main concern when you hear about Treasury yields are going up too fast. They are going higher in historic terms. This isn't a bad number. But when we almost double in 2 to 3 months, the yield. So our yield was about 0.8, 0.9 back in the fourth quarter of last year, and we've doubled that. So what happens with this, it's kind of a trickle effect, is people, if the yield on the 10-year Treasury gets high enough, people are going to move out of mortgage-backed securities and other bonds and stocks and move into treasuries. Okay, so that's when these yields are so low, people get into mortgage-backed securities. These are both bonds, but this is related to the mortgage industry or mortgages, and this is the U.S. Treasury, the U.S. debt. Okay, so that's the explanation of those. So we're going to continue to monitor throughout the day. This was a nice comeback. We're up 5 right now, but you can see how volatile it is. Well, let's go one more time to the intraday chart so I can show you guys where we're going, where we were, and where we think we might be going. So you can see we came out of the gate kind of low. We were down at 1.33, and then we rallied all the way back up. What I don't like right now is this red candlestick. That means there's more sellers than buyers, but there's a little bit of a delay right here. This is live. So we are up 5, which is good. It means there's buyers in there right now, so this will probably change to a green candlestick here shortly. So that's going to be my report for today. I apologize again about my live stream video. I tried my best. It was the first attempt at that. I'm going to work on that diligently, so next week we could start Table Talk Tuesdays, where you guys can ask me questions about the real estate business and kind of anything else you want to talk about. So thank you so much for watching. What I do want to ask people to do is, please, if you find value in this video and my morning videos, the opening bell with Dan Frio, please, all I ask, give me a thumbs up. You can leave comments down below. I read every comment. Believe it or not, even my team's like, who's replying to all these YouTube questions? I do it at night. So don't be surprised if 1 in the morning you get a response back to your questions or your comments. I greatly appreciate those. So your thumbs up mean a lot to me. Subscribe down below. Click the bell so every time I post a video, you at least get an alert so you can be forewarned of what's coming up. Like this was a big move for today for people in the mortgage business, people in real estate, financial planners, wealth advisors. I met with a group last night of wealth advisors, kind of picking my brain about the stock markets and real estate and where the direction of a lot of this stuff is going. So all I ask you to do is please do those things for me. If you're in the process of building, buying, or refinancing a home, please reach out to it. If you're in a forbearance, check out my video that I posted yesterday. It's in regards to forbearance. If you, coworker, loved one, cousins, aunts, uncle, anybody is in a forbearance, I need you guys to call us. And what we're going to do is just get a little bit of information from you, scrub through that data, and be able to provide you the best exit strategy for you. It's specific to you. Every scenario is going to be a little bit different. So we need you guys to reach out to us. Here's the best way to reach out to us is go to therateupdate.com. And the fastest way to get us is call. Just call the 800 number, 844-775-LOAN. That's 844-775-5626. Or schedule an appointment. You're like, Dan, I'm at work right now. I can talk to you tomorrow morning at 9:30 for about 20 minutes. Log in here, see if that time's available. If not Friday, if not whenever, you can schedule your appointment. So please use this scheduling platform if you don't call. Otherwise, if you want to apply right online, you click this tab right here. If you're like, hey, I want to buy a house, but there's a lot of things I don't know, and I'm kind of I can't call you, it's too late or whatever. Go through this. It's a little, what we call a funnel. It'll ask you about 12 to 18 questions. Based on those answers, it'll help me determine the best program for you. That's for the purchase program. That's for the refinance program. Or if you're like, hey, I just want somebody to reach out to me, just click here. And probably within 10 or 15 minutes, somebody will be on the line with you or emailing you to answer any and all questions that you have. So that is it for today, guys. God bless. Be safe. Be happy. And I will see you tomorrow, God willing. Same time, same place. Bye-bye.